Morning, Steve Freed in Chicago with the morning grain comments. Well, it's wet here in Chicago. It's supposed to be wet for the next 10 days across a big chunk of the Midwest. The morning maps hint that, again, parts of Kansas, Iowa, northern Illinois, Wisconsin is going to be hit with somewhere between 4 and 8 inches of rain, locally heavier than that. Again, overnight prices were a little bit higher. Yesterday prices were higher. For the week, we've seen wheat prices up about 12 cents, corn 11 to 12 cents, beans up 14 cents. And I think there's three factors in why the market has rallied. Number one is that we're seeing some macro buying. Fed Chairman comments suggest that interest rates might go up here in the United States. We've seen the bond market break pretty hard. It weighed on the stock market yesterday. And I think that there may be some money moving around from the stock market into the bonds and maybe into commodities. We'll be watching crude oil to see if it continues to move higher to offer some support in that move. Funds are basically short beans, oil, short corn, and short a little bit of wheat. So does that mean that they come in and cover those shorts irregardless of what the numbers suggest? Number two is the wet weather across the Midwest and the slowing down of farming harvesting. On one hand, I think that the corn demand is very solid, and that offers support to the corn market. On the other hand, the key is what the USDA does next week with the yield. And if they increase supply and increase the carryout, it kind of softens a little bit of that need to rally prices from a demand standpoint. And then finally we have perception that in 2019, assuming normal weather, South America, Europe, Russia, even the United States will have good crops. And that'll add to the supply and offer resistance, especially to deferred contracts. Yesterday, the USDA Ag Secretary said that maybe U.S. has been too focused on China buying beans, and that they may need to look elsewhere to try to do deals for beans to other countries. The market took that negatively, suggesting that maybe he knows that there's no deal imminent between U.S. and China, and that in general, whoever is selling beans to China will benefit from that, whether it's South America or the United States. And again, some people think that eventually we need to take 200 million bushels off the U.S. bean demand and add it to the carryout, because China may not buy any beans in 2019 from the U.S. without a resolution. So in general, beans is all about China. The corn, you've got the funds short, you've got harvest slowing, you've got solid demand versus what the USDA might say in yield and what happens in next year's crops. And the wheat market, well, again, it needs evidence that U.S. demand is going to increase because of the lower world crops. And that window might be narrowing if there's good crops next year. As always, these are my thoughts and not those of ADM Investor Services, and have a safe and profitable trading day.